friends, we got Bitcoin up 0.5% today, trying to hold the 39,500 level. We've got a green candlestick, but we've not moved far from yesterday on Saturday. We're holding at a key level on Bitcoin. We're going to cover that off. We've seen some interesting on-chain metrics, which I'm going to share with you on the bullish side. We've also seen some interesting data from exchange trade volumes, which I want to share with you. Plus, Brian Armstrong, the CEO of Coinbase, has released some thoughts around how he thinks crypto should be regulated, which gives us a clue for what we could be seeing down the line for crypto. So make sure you hit the like button. Don't forget to subscribe. As always, sit back, watch this video till the very end. We've got a lot to cover off here on what is normally a sleepy Sunday, but a lot of data for us to digest and cover off. Make sure you sit back, hit up the like, subscribe. As always, these videos are brought to you by, yes, myself, our very own course member live streams, ijaz.uk/member. Links in description. Consider joining our course member live streams. Now, as you can see here on this chart, which we've been following on Bitcoin, we broke to the downside. We went for a retest, and it looks like we're bouncing all the way back down to the downside. Now, remember, we're holding this important level here at 39,185. That's this key level here, this yellow horizontal line. Now, you can see we've kind of bounced off of it a few times. Once here, and we wick down here, and we're fighting for it here at this level. It's important we hold this level and able to work our way back up to create a bit of a W pattern, which can help move us back up to the upside. That's what we're looking for here on Bitcoin. Now, if we take a look at the fear and greed index, we're sitting at 24. We're back into extreme fear. And we've covered over the last few days what the fears around the wider markets are. We've discussed those at length. If you've not watched my videos from the last few days, just scroll back, go watch those videos, because I speak a lot about what's going on with the Fed. Why are they spooking markets? And when do I think we're going to get some really interesting buying opportunities leading up to May the 4th and the 5th FOMC meeting? Really important that we understand that, because that's what's causing this pain in the market. Now, if we head on over to this Bitcoin chart here, you can see on this daily chart, we're managing to hold this level of support. So that's the positive we're having at this stage, is we're managing to hold this line and create slight higher highs. So we're on an uptrend here, technically, on the daily chart, which is good. If I bring out the EMA ribbon, you can see, however, that the EMA ribbon hasn't gained any extension. So from an EMA perspective, we're neither bullish nor bearish here. We keep changing, right? We go back up, and then we're at the below it, above it, below it. This is not great. This is almost like a sideways pattern. Okay, so now we need to quickly get ourselves back up above the EMA ribbon, work our way back up towards the upside from getting a bounce from this trend line. So that's what we're seeing us fighting for here now. You can see the candles trying to fight for green. Otherwise, if we don't get a green candlestick here and we start red candlesticking down here, we'll be losing the trend and heading test the bottom back down here at 34,000. So that's what we're looking at. Now, if we zoom out a little bit more, and if I turn off that EMA ribbon and go to the weekly chart, what I want to show you is the macro view. And the macro view is showing us what we thought was happening. And what we was hoping to see is continued higher highs and higher lows, right? We've got higher highs here, and these are higher lows. And we expected once we bounce from here, we would have got a good run towards $70,000 range, right? To create that higher high above here. But we started curling over, and now we've had 3 red weeks, which is not ideal. And we're fighting for this 4th weekly candle here, which closes very, very shortly. I think it closes in about 3 hours indeed. Okay, so that's what we want to look out for. Now, if this starts to create a lower low than these lows, that is not going to be ideal. So we need to hold this uptrend, the one I just showed you on the daily chart. We need to hold this uptrend and start working our way upwards here. You want to drift towards this way. Even if we don't move explosively up, that's fine. As long as we can drift and continue the upwards motion, that's great. We can start working towards the upper bound of this channel. That's what we want to see. Now, what are we seeing on FANTOM? Because here on FANTOM, we're seeing equally non-fun times, right? Let's again start from the weekly. Let's go backwards here on FANTOM and bring out the EMA ribbon. You can see that we are indeed bearish on our weekly EMA ribbon, right? We got the rejection here on this big red candlestick. That followed 3 good weeks here on FANTOM, taking us back to the top of the EMA ribbon, but it just rejected us and we started heading to the downside. Now, if we take a look at the daily chart here on FANTOM, you'll remember that we were in our bearish continuation pattern. Okay, you remember this was our bearish continuation pattern, and we broke to the downside. Now, since then, we've managed to get some sideways action. What I'm going to do is I'm going to switch over to the hourly to show you what's going on. And what you can see here on the hourly chart is we've managed to get some sideways action in this channel, which I've drawn using these violet colored lines. And you can see we've pretty much run up to 122, and then we ran low here as $1.06, $1.05 on this low here. And now we're starting to come and try test some of those levels again, right? We got low here again to 106. We're currently sitting at 107, 108 range at the time of the recording this video. But we need to see which direction are we going to now break out. Will this pattern break to the downside? In which case we'll continue our downwards motion, right? Remember, if I zoom out a little bit to the 4-hourly chart, you'll remember our price target from the breakout of this continuation pattern is back down in these territories, right? It gets you down to 96 cents and even slightly lower here, and we don't want to see that happen. So if we lose this channel to the downside, if in other words, we open up the week, the NASDAQ is down, the QQQ is down, we're seeing S&P down, market's still fearful, and Bitcoin's heading to the downside, closer towards 35 and that kind of range, then no doubt Phantom will start heading towards 96 and continue a downwards move to the downside. So we need to be cognizant of that. In case you're looking to buy the dip, that's something you want to be looking out for. You can see again here on the file, we're below our EMA ribbon. If we check that on the daily chart as well, yes, we're below our EMA ribbon, and we continue to be in a bearish stance here on the wider crypto market and Phantom as a whole. And these are my perfect times to buy. Anytime I see these kind of things in the market, that's when I want to have conviction, because all I'm seeing are some of my favorite projects super in the red, not just Phantom, but many others super in the red, super undervalued right now, all because the wider market is heading to the downside. And and this is even better, why is the wider market heading down? Not because of something crypto related, not because of regulation is coming, or something's really bad against crypto or countries are banning it. It's not because of that. It's because just the market is risk off right now. It's risk off, and people are taking money away from risky assets. So you're getting hugely discounted prices on some of your favorite crypto. So if you're bullish crypto for the long run, and I'm going to show you why you should be, then these are no-brainers for you to ladder in your buys and build out solid positions. So before we do that, I'm going to show you the bullish thesis in a little bit, but I do want to show you this. And we can see weekly Bitcoin Ethereum volume on exchanges has been quite subdued. And we've seen this for a while. You can feel it. That's very normal. Any metric you want to look at right now is pretty subdued. If you want to look at YouTube numbers for influencers, if you want to look at these kind of things like exchange traded volumes, you're going to see that as very low, particularly versus some of the peaks we saw. So is this a bad thing? Well, ultimately, not really. This is not what we should be focused on. What I want everyone to focus on is instead what's happening to the Bitcoin liquid supply versus illiquid supply. So if you look at the red, this is your highly liquid supply. If you look at the amber here, this is your liquid supply. So this is supply that people move on and off exchanges very frequently. They're trading their Bitcoin in and out. Call these the high traders. Then you have your illiquid supply. It's really important to understand the difference between these types of investors. They're very different. Now, if you haven't watched my video, I did make a video where I'm explaining, I'll try to dig it up and link it up somewhere here if I can find it, where I did explain the different types of holders of Bitcoin. In essence, you've got the holders of Bitcoin who are the long-term holders of Bitcoin. That's the illiquid supply. That's the blue. These people understand that Bitcoin long-term is a hedge against fiat currency. It's a hedge against the money printing. It's a hedge against traditional fiat currencies as we know it and the normal centralized finance as we know it, right? That's what this is. It's that hedge. Now, what the rest of things are, these liquid and highly liquid people, those are your retail investors, those are your traders, your people looking for a quick buck, and it's the institutions and the hedge funds who are treating Bitcoin as a high risk on asset. No different to how they treat high growth stocks on the NASDAQ or any other type of high growth stock. When things are looking good, when the Fed's in control, great stuff. We want to own some Bitcoin. We want to own some crypto because we want the high returns and the high yields. When things are looking negative, we want to come out of those. They don't care about the long-term thesis of Bitcoin or if it's going to change the world or any of the narratives we talk about here in this community, because their intention is just to trade. And there's nothing wrong with that. But we have to understand that these movements will continue to move because that's what they do. They're trading in and out, and they're trying to take advantage of the returns they can get from Bitcoin in the short term. They don't believe in the long term. They don't care if Bitcoin gets to 100K, 200K, 300K. That's irrelevant. The blue section, however, the illiquid supply, are exactly those people. Those are the ones who are dollar cost averaging. Those are the MicroStrategies of the world. Those are the Do Kwons. Those are the other believers in Bitcoin who are buying and they're taking it off exchanges and they're holding. They're holding. And I class myself as somebody in this blue section. I'm buying as much Bitcoin as I can and I'm storing it away, and I believe in the long-term thesis around Bitcoin. So really important that we understand that, because sometimes we can get messaging of this and we're worried that this is moving the price, when the reality is long-term illiquid supply continues to inflect upwards and continues to grow as more people are buying, more people are seeing that, and they're taking it off exchanges. Really, really important. And if you just look at even the non-zero addresses on the Bitcoin and the growth over the last 10 years, it's just growing year on year. And that's what we need to focus on. Those are the things that's important for us to focus on. Let's also take a look at this. This is extra evidence, right? This is the percentage of the Bitcoin supply last active 1+ year ago. In other words, they've bought it and they've moved it away. This is illiquid. And look at the percentages we're seeing here on the right-hand side. We're getting close. We've just crossed 64% here, which we've never done, okay? So this is huge. This is big. This is showing a lot. 64% of Bitcoin supply has not been touched in over a year. This is the hodler mindset. This is the illiquid supply. This is really good. It puts pressure on the limited supply and it helps price start to move to the upside. These are the things we need to focus on. Let's also take a look at this, which is the fear and greed index. So anybody who's wondering, as a long-term investor, what do I need to be doing? You guys see us on every single video. We talk about the fear and greed index. And it's not a bad strategy if you simply said, every time this went to extreme fear, and remember, we monitor it every day, right? We look at it like this and we monitor this score. We know, okay, it's extreme fear. What do I say? I roll my sleeve up and I say, this is when we need to do our work, when this is extreme fear. And when it's green, we sit back and let the rest happen. And if you look at the chart that I was just showing you there, that's if you just did exactly that, if you just bought in on these dark reds here, dark red, bought some more, you would be in phenomenal shape. And that's all you got to do, right? When others are fearful, you want to get in. When others are greedy, don't touch anywhere here. Let your Bitcoin do the work. Do not FOMO in. If you FOMO in here, you're going to get burned. When it retraces down, you're going to struggle. If you buy here, when it retraces down, you're going to panic. If you buy here, right now at this point, you're panicking, right? If you bought here in the green, down here, definitely you're panicking. These are the people that get wrecked. If you have a consistent theme of accidentally buying the tops here because you need the market to give you conviction, you're in pain. And then it's really tough to be in crypto because you're going to keep panic selling. Anybody that's using my strategies, who's being patient, waiting for the dips, waiting for the pullbacks, letting the market be fearful, buying off 50-day averages or trends, or using the EMA ribbon, or using your Fibonacci retracements to see pullbacks and wait for pullbacks to trend, then you lot are doing really, really good and you're buying in at these levels, and then things become so much easier. That's what we need to focus on. And the last thing I want to cover off before letting you guys go is Brian Armstrong. So Brian Armstrong was on the All In podcast, which many of you guys may or may not watch. It's a really good podcast. Highly recommend you guys watch it. And what he covered off was an interesting thing. He said that ultimately, there's not going to be one governing body in the US which will regulate the crypto market. And the reason he says it is crypto is loads of things to different people. He goes, here's what I'm realizing. Crypto is going to be many different things. And in essence, to summarize this longer article, and if you haven't watched the podcast, he says that some of crypto, like Bitcoin or even arguably Ethereum, can be treated as a commodity. And in that essence, it should be regulated by the CFTC, right, who are in charge of commodities. On the other hand, he goes, there are some tokens which are clearly securities, right, and they need to be regulated by the SEC. And he says you then have a third type of coin, such as a stable coin, which maybe you can argue is just like a currency. And if it's just like a currency, that's going to have to be regulated by the Treasury. And then he goes, okay, you even get artwork as well, right, with NFTs and other kind of things. They shouldn't even be regulated at all. So it's a really interesting point that Brian Armstrong raises, and he's the CEO of COINBASE for anybody who doesn't know. So obviously he's going to be clued up on all this sort of stuff and spending time research and studying and lobbying with many of the regulators around this. And that's going to be the case. I think that's important here. I think what he touches upon here is important. We want to balance protecting people, but we also want to not have the government be in a position where it's picking winners and losers. And I completely agree, guys. A lot of people who are new to crypto or really part of that, crypto army on Twitter, they will start spreading this narrative that we don't want any regulation. No, we do need some regulation. Anybody who's actually bullish on crypto will accept that there should be good centralized avenues and there should be good levels of regulation such that the average person can come into crypto without fearing a pump and dump, without fearing getting the rug pulled or getting confused with the tokenomics. It's really important that we have a good level of regulation. And again, we point to the examples of cars. Cars back in the day never got mass adoption until it was safe. And when did it become safe? When roads were built, when traffic lights were in place, when there was some regulation around speed cameras and things like that. That really helps the adoption of technology. Now, I agree. regulators can get carried away and we need to hold them accountable. When I say we, I mean thought leaders like Brian Armstrong and other influencers and the rest of the people in the space need to continue to lobby them to say regulation needs to be clear, it needs to be productive, it needs to be there to help, and you're not there to tell us what investments are good investments and bad investments. And that's the gist of what Brian Armstrong was saying, and I couldn't agree more with him. We need some regulation, it needs to be done in the right way, and it needs to be done in a way that doesn't hinder innovation or hinder investments, but protects investors from fraud and scams. That's ultimately what we want regulation for. So there you have it, guys. We're seeing Bitcoin is at a critical level. We got to hold these levels. We can't create these lower lows on these trends. We need to hold these levels. So if the chart you really want to be looking at is looking at this chart and just making sure we don't start falling off this cliff here. When we see a good bounce, a good response, and start moving to the upside, we know that the market is fearful around interest rates and around Jerome Powell, and if he's going to rug pull us on the next Fed meeting, is he going to do a double rate hike? But the double rate hike is priced in. So I don't want to see too much overreaction around that. Will it be the quantitative tightening that panics the market? We'll see. We know that there's still some earnings going on, so let's see how that manipulates the markets going into tomorrow. We'll keep a keen eye on that. But for me, any of these prices are just great times to accumulate. Like I said to you guys, build your strategy, build your portfolio out, learn about crypto. In these kind of times, it's really important. Take time to learn about liquidity pools, learn about staking, learn about how to analyze tokenomics and founding teams. And if you want help doing that, and you like my perspective on how I do that, consider checking out our course member live stream. So what I'm going to do now, guys, I'm going to head off. I'm going to leave you a link to the video which explains FANTOM tokenomics. Really important that you go watch that. Even if you're not interested in FANTOM, go watch that and understand how I break down the tokenomics of a project. What are the key areas I look for, and what was the weakness I found in FANTOM? It's an important Achilles heel. It's something we've brought up with Simone Pomposi. I'm going to link that video up at the end of this video as well, the interview with the FANTOM CMO. Make sure you go watch that video and let me know what you think of those in the comments. As always, guys, if you appreciate this perspective, this blend between technicals and fundamentals, hit up the like and subscribe, and I'll see you in the next one.